What went down in the auto sector this week? We give you the major updates across earnings as well as corporate updates in the auto space. Let's get into it. This company's order book is 7 times its current annual revenue. Yes, we're talking about Sona BLW, and the company is in the news on the back of strong Q4 earnings for the financial year of 2024. The company showed 19% revenue growth while showing industry-leading margins coming in at 28.5%. This company has doubled in revenue in the past 3 years since listing and has given a stock return of roughly 71% in this time frame. Why you should know about this company is that the current order book is 7 times its current annual revenue, while what's interesting is that 79% of this order book is in the EV space. It's truly a futuristic auto component maker, and 75% of the brokerage calls are with a buy, seeing a 30% return potential from the likes of Citi as well as Nomura. The second company we are tracking is expected to be the first in India to locally manufacture batteries for electric vehicles right here in this country. Exide Industries is tracking on the back of strong earnings reported in the Q4, and the margins were the mainstay, coming in at 12.82%, 200 basis points higher compared to the past year. We covered the stock last week on the back of a pact that they signed with Hyundai as well as Kia Corporation to supply the electric batteries for the electric vehicles going forward. Do note that the company is expected to be the first in India to commercialize a manufacturing plant for electric vehicles and making batteries for them going forward as well. This company is interesting, and chances are that if you've been in the Vande Bharat train, their products were in it. We're tracking Schaeffler India right now, and they reported good earnings for the Q3 as well as have an update on the business front. But what did the management say, and why should the stock be on your radar? While the revenues were up 10% compared to the previous year, margins were slightly subdued for this quarter. The company has a business update where it has reorganized certain business divisions, while the integration of bearings divisions has been removed from the automotive technology and added to the industrial segment, which makes it a total of 42% of total revenues. Automotive businesses has been segregated into power chassis as well as EV mobility, furthering its focus on the electric vehicle space in India. So how has the stock performed in the past 5 years? The stock is up roughly 230% and is one of the global tech-enabled companies which have an India unit which is listed. The increased localization from 66% to 77% shows management's focus in India on localization. What's important is that the company is a top bearings manufacturer in India and ranks number 1 by revenue as well as market cap in this space. Now moving on to the third stock, if you're looking to buy a Maruti car, it's good news. The prices of the Maruti car might be going down. That's what HSBC thinks. What else did they say, and what were the key takeaways from the quarterly conference call? Let's deep dive into this. So first, margins was a key issue for the Maruti Suzuki this quarter, and they had a one-off impact which led to the reported margins coming in below the Bloomberg estimates. On inventory, the management said that the company had an inventory of roughly 1.3 lakh units, which essentially means that this is kept at the dealer and this is approximately 1 month sale. The management highlighted that this is the new normal, which essentially means that going forward, this level of inventory will be maintained. Finally, the company also said that they sold roughly 4.5 lakh CNG vehicles in this particular year, and they are expecting to sell upwards of 6 lakh CNG vehicles going forward. Do note that the company had a new manufacturing facility of about 1 lakh units added to its existing plants, which will be servicing the CNG capacity and is a key positive for the margins, as these CNG vehicles show really robust growth in margins as well as revenue for the company. Finally, on a small car share, the company indicated that the share of small cars industry-wide is down to 27% from a high of 46% seen in 2018 and 19. This indicates that the company is seeing lower purchase of the small cars, while there is a decrease in the first-time buyers as well. Currently, this has been shared to the SUV sales, which is currently at 21% market share for Maruti, and they are expecting the next 12 to 18 months to be strong for this particular segment. The company has also signed a new MOU with the Gujarat government to invest roughly 35,000 crores over the next few years to set up a new manufacturing facility of roughly 10 lakh units. Now the company is estimating to sell roughly 40 lakh units by 2030, and this production facility will be key in this. So what are the brokerages saying? Nomura has maintained a neutral with a target price of roughly 12,520, which is a 1% downside from current levels. They say that the market share risk may be faced by the company going forward, and they are estimating that the market share will fall from 42% currently to 40% over the next 2 years. They have also conducted a survey which shows there is demand moderation, inventory buildup, as well as rising discounts going forward, which does not augur well for the company as well as the industry. Finally, HSBC has a positive rating on Maruti Suzuki with a target price of 14,000, which is a 10% upside from current levels. They have said that the company missed the EBIT guidance going forward, but it does not impact the FY25 and 26 estimates for the brokerage. They say that the discounts might go up slightly, which will be good for the consumers, which will help also clear the excess inventory built up over time. So that's all we had on this week's Auto Wrap. Stay tuned to NDTV Profit for more.